Arbitrage is actually a very old concept.
Let's take a step back. Explain how a typical Bitcoin arbitrage process would work.
Most of your money is just in the bank on a computer screen.
If it's so profitable, why isn't everybody doing it? Ben, when was it? About 3-4 weeks ago, we had a conversation. We spoke about Bitcoin arbitrage. What is this phenomenon? A week later, one of my friends right out of China gave me a call. Stefan, I've heard about Bitcoin arbitrage. I want to get into Bitcoin arbitrage, connect you to. Very happy currently in terms of his returns. So this phenomenon has been coming up and up and up, and there's a lot of people investing currently in Bitcoin arbitrage. And in today's episode, we've got Ben here in the studio, and we're going to talk and unpack Bitcoin arbitrage. What does this mean? First of all, what is Bitcoin? What is arbitrage? How do you connect the two? What is the sort of returns that you can expect? What is the risks involved? Which I guess is some of the questions that you guys get quite often. When did you discover Bitcoin arbitrage? How did this journey start? Welcome to studio, first of all the way from Cape Town. Tell us, where did this all start?
Yes, thank you, Stefan and Werner, for having me here. So, I'm going to take you back my whole life history, but
Okay.
I'll start in 2020 when I quit my job at the time. I was managing quite a big lump sum for a family office in 2020.
Okay.
And
So you've always been in the investment world?
Yes.
Okay.
Well, I'm a chartered accountant, so I started off with a bit of just normal auditing, and then I moved into finance and investments.
So you're a numbers guy?
Yes,
Okay.
I love it. Yeah. So then I decided, well, this management of these investments that we're doing for the family office is a bit too traditional.
Okay.
And we did a bit of alternative investments, but mostly more traditional investments.
Okay.
So I decided I'm going to resign and see if I can start my own business. This was in February 2020 as COVID started. Following this,
Okay.
I had a few months of just trying new things, doing a few different things, and the crypto arbitrage was introduced to me by one of my good friends at the time.
Okay. All right. So imagine I was in high school and someone explains Bitcoin arbitrage to me. How would you explain it to someone? What is the layman version? I think let's first unpack arbitrage. What is arbitrage? What does it mean? And why with Bitcoin? Why do you do the arbitrage with Bitcoin?
Okay. So, Stefan, arbitrage is actually a very old concept. It's well known in the investment world. What it basically means is to take advantage of a price difference in an asset between two locations, which means in layman's terms, something is cheaper in one location and more expensive in another location. And what you can then do is you can buy it for cheaper in the one location and sell it for profit in the other location.
Okay. So
That is essentially arbitrage.
layman terms, I buy a cool drink in Bloemfontein for 10 Rand. I go sell it for 15 Rand in Joburg.
100% right.
And you make 5 Rand arbitrage.
Oh, yeah. That's
Happy.
it. Very, very simple. Yeah.
How did you connect that to Bitcoin?
Well, it was this strange phenomenon that a Bitcoin, if you Google the Bitcoin price in dollar, you'll see, let's say, for example, it's $100,000 at this point in time. And if you times that by the exchange rate of 18 Rand to a dollar, you'll get 1.8 million rands, right? But if you look at the price on Luno, what you will notice is the Bitcoin in South Africa might be trading at 1.9 million.
Oh.
So there's 100,000 Rand profit that you can make if you can buy the Bitcoin in America and sell it in South Africa.
Okay.
And why specifically is crypto? So I'm just going to refer to crypto, not specifically to Bitcoin. Why is crypto more expensive in South Africa than it is in the rest of the world?
Very good question. And the reason for that is simple, because we are one of the very few countries in the world. I think there are about 3 or 4, correct me if I'm wrong, countries that have exchange control regulations. So what exchange control regulations mean is that we are limited by law, by the South African Reserve Bank, as to how much money, rands, we are allowed to take outside of the country, offshore. So because of this reason, South Africans can't send unlimited amounts of money overseas to buy Bitcoin and bring it back here.
Okay.
There's a limit to how much you can send offshore,
Okay.
which then creates a supply issue of cryptocurrencies in South Africa.
Okay. Okay. Let's take a step back. Explain step by step how a typical Bitcoin arbitrage process would work. Let's start from the beginning. A brand new client comes to you, Ben, listen, I've got X amount of money, and we'll talk a little bit about some of the options. I've got X amount. Explain that process to us, step by step.
Okay. So as I mentioned, you need to buy the cryptocurrency overseas for a certain price,
Okay.
right? Which is a lower price than what it's trading for in South Africa. So in order to do that, you need to convert your rands into the foreign currency, which let's say dollar. Okay, so that's the first leg of the transaction. Rands need to go outside of the country, get converted into dollars, and that goes overseas to the US, to an exchange. That's the first leg. The second step is the dollars in America then are used to buy the cryptocurrency with, right? Once the cryptocurrency is purchased, it's sent back to South Africa, and it's sold here on Luno or Vale for a profit. And you are then, your funds that you've invested is returned into your account with that little bit of profit.
Okay. And that's one cycle.
That's one cycle, yes.
And then
So-
you repeat the cycle.
Yes. So you can repeat that cycle up to your limit, which is imposed by, like I said earlier, Excon, the South African Reserve Bank.
And what is that limit currently?
That limit currently is a total of 11 million for an individual in South Africa. It is a 1 million single discretionary allowance and a 10 million foreign investment allowance.
Okay. So where do most people, would you say, go wrong when they try to get into Bitcoin, and specifically into arbitrage?
That's a tough one. I think in the past, there's been a lot of misinformation. The industry has not been regulated up until June last year, 2024. So there was a lot of companies in the crypto space started by people who maybe were just taking chances. And I think a lot of people didn't know what it was, but they saw the price going up and other people making money. So they just put in their money into something they didn't understand.
Can I put out a statement? And I think both of you will agree to this. Is there was a lot of Ponzi schemes and a lot of almost fraud happening in the virtual or in sort of virtual currency space, cryptocurrency space. And I think the notion is out there that if you do Bitcoin arbitrage, you also participating in that sort of events. Whereas in our conversation that we had 3-4 weeks ago, yes, we're doing arbitrage with Bitcoin, but the risk involved, and I think that's where a lot of people get dismissed, is that it's not Bitcoin. We're not investing in Bitcoin necessarily. Bitcoin is just the vehicle where we're doing the arbitrage. The investment opportunity here is the fact that there is a price difference in arbitrage. And I think once a lot of investors or clients, once we have the conversation, then you tend to pick that up, that always when it gets to Bitcoin arbitrage, that a lot of people think we're investing in Bitcoin. And Bitcoin is the trading currency, which is not the case, or the underlying vehicle. Am I right in saying that?
100%, Stefan. It's like your Coca-Cola example, right?
Yeah.
The underlying asset can be anything. It can be the Coca-Cola you buy for 10 Rand in Bloemfontein and you sell it for 15 Rand in Johannesburg. We are just doing it with cryptocurrency, Bitcoin, Ethereum, some stable coins like USDT, because there is this price difference if you buy it in America and you sell it in South Africa. Okay. So the client is not exposed to the price risk, the price of the Bitcoin or the cryptocurrency moving. You're just locking in that profit. As soon as you buy the Bitcoin in America, you sell it. You send it here and you sell it here.
Okay.
Ben, maybe just explain to me. So we're talking about like you hedging the price of the specific Bitcoin, let's call it this cryptocurrency. We went back and we said in South Africa, Bitcoin is more expensive than in another country. Let's call it like the United States as an example. And you mentioned that because of supply and demand. Okay.
Yes.
From my understanding, Bitcoin and any cryptocurrency is not a tangible asset. It's not a tangible currency. Okay. Why is it that there is such a shortage of supply in South Africa and a higher demand that increases the price compared to in another country?
Can you see your money? The money that you have, you can see when you draw it from the ATM, right? It's cash. It's a note. But most of your money is just in the bank on a computer screen. So the concept of Bitcoin is similar. It's on a screen, but it is something. It is a software code, right? Which moves like your bank money moves when you transfer it from one account to another. And because of these ex-con laws that we spoke about earlier, there is only a limited number of coins coming into South Africa each day. You can actually check it on the exchanges. It's quite a large amount. I think it's like 300 million rands worth of cryptocurrencies coming into South Africa every day, being bought on exchanges. So who's buying all of these coins?
Yeah.
We don't know, but there is the demand in South Africa for a large volume of coins, and there is a very limited supply coming in because only individuals are allowed to send money abroad to buy these cryptocurrencies. That's another important point. Companies aren't allowed to do this under the current regulations. So a company is not allowed to send over R1 million, buy a Bitcoin, bring it back and sell it here. It's not allowed.
Oh, so it's only natural people.
Only individuals.
My next question is, so if I, for instance, transfer my 1 million allowance out of the country, okay, is there another country where Bitcoin is more in demand than South Africa, where I can actually use 100,000 rand sitting in an investment in another country and then buy in South Africa and sell it there?
Yes, yeah. There's countries like Nigeria, Malawi, I think even Zimbabwe trades at a premium. And the interesting thing, it's not even only Bitcoin, it's stable coins. So just to give you a bit of background, a stable coin is pegged to, let's say, the US dollar. So one USDT is equals to $1. But in a country like Malawi, because the people really would like to have dollars, they were willing to pay you maybe 1.5 of a dollar in their local currency just to get hold of a dollar.
Wow.
Because there's such a shortage.
Sure.
There's a supply shortage and everyone wants dollars. So it's currently quite high. I think it's about 20 to 50% on some days in Malawi, especially.
So what kind of returns can someone expect in Bitcoin arbitrage? What's the sort of returns? And secondly, also, if it's so profitable, why isn't everybody doing it? I guess that's the big question everybody wants to know.
Okay. So now just to take it a step back also. What people always forget is they see the big returns that we maybe publish that, you can make 52% return on investment. Okay. We need to break it down a bit and look at how do you get there? Okay. So how the arbitrage investment works is you need to invest between 200 and 500,000 rand. Okay. And like we said, that money gets sent overseas to the USA. Bitcoin or a fraction of the Bitcoin is purchased. It's brought back, it's sold here for profit. And your capital and your profit is paid back into your account. That's one transaction. Okay. So if you do that with 200,000 rand, remember earlier we said the limits are 11 million. Okay. So you can do that transaction for 200,000 rand. You can do that transaction 55 times, right? 200,000 times 55, 11 million. Okay. So every trade, let's say the arbitrage premium at that point is 1% throughout the whole year that you're investing. You can make 1% on your 200,000 rand for each trade. Okay. So you're going to make 2,000 rand, 2,000 rand profit, 2,000 rand profit, 2,000 rand profit for 55 trades, which is then going to give you a total of 110,000 rand profit, which then seems a lot when you put it on 110,000 on a 200,000. Yeah, but then it sounds like a big return, but actually you've just been making a very small percent, 1% return, but on 55 trades.
Okay.
And how long does a trade typically take?
It's like 1 day. So what day is it? Monday morning, the 200,000 Rand is sent out. It's converted into dollars. Bitcoin's purchased, brought back, sold here. Next morning, you'll get your capital and your profit back.
Okay. And I assume you can't do that 55 days straight and then make 110,000 Rand in 55 days. You would probably have to look at the values of purchasing a crypto and then selling it this side again. So you also have to time the let's call it the fluctuation in a purchase and a selling price.
100%, Bernard. Like we have proprietary software that's been written and other companies have that as well, where the software actually monitors the prices and then it locks in the biggest price difference as it fluctuates up and down. There's also other things that delay that 55 consecutive day trading. Like that would be great. It used to be like that.
Okay.
But now, you need to apply to SARS to get permission to take 10 million extra out of the country. So that also takes time.
Okay, so the first 1 million goes smoothly.
Yes.
And then the next 10 million on top of that is where sort of there's a bit of a delay.
Yeah, it's SARS has built this into the e-filing system for us. There's a process, there's a tick box where you tick it's for crypto arbitrage. They're aware what's going on. So they've made it a bit easier for us to get these approvals faster. Because obviously it also reduces the burden on them, because they were getting inundated with applications from all the people doing the crypto arbitrage.
If you're buying crypto at a specific price in the US and then selling it in South Africa again to make a profit, are you guys looking at a specific margin to buy and sell it, or are you just finalizing a trade at any specific growth between the two, the selling and the purchasing price?
So I think all companies are different. Our mandate is if the arbitrage is above 1%, we will lock in the trade and take profit on that.
Okay. What's some of the highest premiums rates that you have seen in the past? I would believe this is actually closing. Like, is the opportunity, let's say, in the next 10 years gone? Am I right in saying something like that would happen? That arbitrage opportunity will become smaller and smaller eventually, up until there's actually no arbitrage left. What was some of the biggest stuff that you've seen in the past?
Yeah, Stefan. So actually, back when we started, in 2019, the premiums were sometimes like 3.5%, 4.5%, 5%. Actually, back in 2017. When, I don't know if you remember, but the Bitcoin price spiked in that December and there was around 20% arbitrage. So if you put in a 200,000 Rand trade, you would make 40,000 Rand.
And with one, and then there's 55 of those in a year.
Yeah.
And currently, at the time of this recording, what are you guys seeing, like just the arbitrage percentage in the last 50 days?
I don't actually want to say, but at the moment it's quite low. It's around 0.8, fluctuating to like 2%.
Okay.
But we always see a few months in the year where it's very low, and then there's other months where it picks up again. So it is up and down.
But it's still opportunity.
Yes, over a course of a year, you can still make a decent, maybe half to 1.5% still.
What affects that fluctuation? Is there political interference, the geopolitical current situation, Trump, tariffs, international politics? Is there stuff like that influences this, or is it?
I think it's all of it.
Okay. Okay.
No one really knows. There's things on the supply side that can influence it. There's things on the demand side that can influence it.
Okay.
But I can't sit here and tell you that nobody knows.
Okay.
If sometimes when intermediaries, banks stop accepting funds from South Africa, like when we were grey listed, for example, there were certain American banks that stopped accepting funds from South Africa. Obviously, what that would cause is no one could do arbitrage. So then the arbitrage premium went up because there was less supply coming in. So if you then could do the arbitrage, you could make a lot of profit for your clients.
Just for listeners that heard a lot about arbitrage, that's thinking and considering an alternative investment like crypto arbitrage, how much flexibility is in crypto arbitrage So if they engage with a company like yourself and they want you to facilitate the arbitrage process, like if we talk about an investment, let's say, for instance, if we assist a client to achieve a specific goal, let's say it's a unit trust investment, short-term investment, we can actually sit down with the client and build a portfolio that can assist the client to reach certain goals in terms of exposure in certain asset classes, equity, property, bonds, and cash. And then my question that I actually want to ask is, if a client decides to engage in crypto arbitrage for an alternative investment, what's the accessibility to their funds? If I invest, for instance, 200,000 Rand, when can I access this fund? Do I have to see the 55 trades through, or can I stop it at a specific amount of trades and access my funds again? And then can an investor say, but listen, guys, I don't want you to sell, for instance, at just a 1% arbitrage. I only want you to sell at a 2% or 2.5% or 3% arbitrage. I'm prepared to take that risk, maybe wait a little bit longer for the transaction, but I want to achieve a high return. Is there flexibility in crypto arbitrage in that sense?
You can withdraw your funds at any time, right? It's similar to kind of a fixed deposit bar at a bank, where if you put it in for 3 months or 6 months or 9 months, we prefer you to leave the money there. But if you want to withdraw it, you can withdraw it. The reason for leaving it is because the arbitrage goes up and down the premium throughout the year. So if you just leave it for a short period, you might not get the full benefit of it. But to answer your question, the funds are accessible. And the second question
is, if I want to, for instance, say, I want you guys only to trade
at a certain percentage.
Yeah. Is that something that's is that option available?
Yes. So what we do is we specify the 1%. The reason we have 1% and above is because we've worked out that at 1%, we can still make the client a decent amount of profit. And over the year, your 55 trades, like a 0.5% profit. And that will still be enough for you and outperform any other investments. Whereas there are other providers that will allow you to set that percentage. But if you do set that percentage higher, the chances are that you probably won't get through your 11 million allowance. Okay, so let's say you set it at 2%, but you only trade through R1 million, then is it really worth it? Yeah.
The reason why I'm asking this is with any investment, at some stage when clients becomes comfortable with investments and they become more familiar with investments, the conversation around fees always comes up. And why I asked this specifically is, if someone is very fee conscious and they say, I want to only trade my arbitrage at a specific percentage, let's call it 2% instead of 1%, because that's going to mean I'll pay less fees on the transaction fees. Okay, but if I understand you correctly, they're not necessarily going to make more money by doing less trades at a higher percentage. There might be more value at trading more frequently at a 1% as opposed to doing less trades at a 4% and saving on a small fee.
Yes. So if you just think, if you make 1% on your 11 million, that's 110,000 you're going to make. If you make 2% on only $1 million, that's only 20,000. So you'd rather get through your full allowance at a smaller percentage than you would get through $1 million on 2%, which is only 20,000, if that makes sense.
Yeah, so it's about transacting the full 11. Yeah. Whether you do it in smaller batches or as million lump sums, same.
Yeah.
So what's the sweet spot? What's the sweet spot in terms of what amount is the ideal amount to actually invest to get as many trades in as possible, okay, at a 1%? Is there a sweet spot in terms of the monetary amount that you have to invest in? I know on your website you guys said ideally we want clients to invest at least 200,000 Rand. But is there a specific sweet spot to this?
Yes, so the first thing we look at is what divides nicely into 11 million, right? So it's usually your 200,000s, 250,000s, 333, and 500,000. Okay. The sweet spot is in the middle of that, so it's about the 333.
Okay.
If you do that 33 times you get to 11 million.
Okay.
And that's kind of the nicest sweet spot. It makes sure you have the highest return on investment at the end as well. Right? The 110,000 on 330 is better than 110 on 500.
So the opportunity is for someone, I guess my follow-up question to that is, who is this opportunity really for? Is it for someone that's got money between 250,000 to 333?
Yes.
333.
Yeah. That's the sweet spot at this point. If the arbitrage keeps going down, it might increase because there are some fixed fees. So it then helps to have a higher amount. But for now, that's the sweet spot. And hopefully with more volumes, the arbitrage providers can keep bringing down the fees so that the client has more money in his pocket at the end of the day.
Is there a startup cost to this? Let's say I've got the ideal amount, I've got 250. Is there a startup cost to this for me to get involved?
No, not at all. So it works similar to your normal investments, with like the equity houses.
Okay.
You do a sign up, you need to have your FICA documents.
Take us through that process. What does that process look like?
Okay, so
to start up.
To sign up, you need to have your FICA documents ready, proof of address, IDs. You need to have the capital to invest, 200,000, 250, 333. There needs to be a legitimate source of funds. So you need to show us where that money's come from. And you also need to be SARS tax compliant, as we will be asking SARS to send money offshore on your behalf. So it's quite important.
Listen, Ben, so all of this sounds fantastic. Okay, the return sounds phenomenal. It sounds like a great alternative investment opportunity for the guys that's got liquid cash that they have disposable to invest. What is the risks? I've heard in preparing for the podcast, I've done some research. I haven't invested personally in crypto arbitrage, but I've heard the terms like, for instance, like slippage. What is slippage? What does that mean? What does transfer delays mean? And I've heard about certain accounts that could be frozen. What is the risks that a client potentially could get himself exposed to in this?
Okay. Yeah, then, and I think the biggest and kind of the largest risk for any arbitrage type investment, including crypto arbitrage, is mainly counterparty risk. Okay, what that means is that any party involved in the arbitrage process goes belly up or disappears. So, underlying, we use big South African banks, so that's reputable. We use well-known overseas exchanges, which are reputable, and we've been doing this for a number of years. So we have a client base, and hopefully it trusts us, and we are reputable. So your biggest risk is that one of those parties goes belly up or runs away. Regarding the slippage and the delays, those happen. So let me just say that those big risks almost never happen. If one of those have happened, we wouldn't be in business anymore.
Yeah.
So those are kind of the big risks, but the likelihood of them happening is almost non-existent. But it hasn't happened yet. Then there's smaller risks like delays in the transfers going overseas. That doesn't really impact the client. It has a 1-day delay to your trade settling, and the next day. So then it won't be the next day; it'll be the day after. You'll get your money back with your profit.
So you mentioned earlier, Ben, that crypto and arbitrage has become regulated in 2024. I've got 2 questions regarding the current regulation. I've read that the FSCA, which is the regulatory body for financial services in South Africa, has received quite a number of applications for crypto arbitrage service providers. To be exact, it's about 420 applications that they received towards the end of last year, of which only 228 has been approved. And the reason why I'm mentioning that and why I'm directing this question to you is, if someone is interested in making use of the investment opportunity, and specifically crypto arbitrage as an alternative investment, how do they identify a reputable company to, for instance, facilitate this transaction on their behalf?
Good question. I think, well, first and foremost, you need to check, are they registered with the FSCA? What licenses do they have? So the FSCA decided and came out and said that crypto arbitrage companies specifically, they need to have category 1 and 2 licenses to facilitate these transactions because they're actually handling client money. So you need to check on the FSCA's website. You can go on there, you can type the name of the company, you can verify for yourself, does this company have a Cat 1 and Cat 2 FSP license? Then I think, a bit of Google search, check how long has the company been running. Look at the top results that come up on Google. Ask your friends and family if they've heard any names. Maybe check in the news. Yeah.
And another question specifically regarding regulations. I've seen there was a recent judgment. I'm not sure if you are familiar with this, but it was a recent judgment that was delivered in the Pretoria High Court on the 15th of May, about 2 weeks ago, where it was Standard Bank against the South African Reserve Bank, where they declared that crypto is not defined as capital under the South African exchange control regulations. What does that mean? Does it mean that this 11 million rand that we've been talking about, the 1 million and the additional 10 million, does it mean that one could now trade more than the 11 million currently because crypto is not considered to be capital? Is that what it means, or what exactly is meant there?
That's a good question, and we've been getting that question even from our current clients.
And the reason why I'm asking, this specific article I read, said that we might see almost like an avalanche of arbitrage currently going to happen because crypto is not considered or defined as capital in terms of these exchange regulations.
Okay, so this is a great question, and I'd love to actually explain it on the board for you. But so what that judgment said was that, yes, crypto is not seen as capital, like you said, which means it doesn't fall under the Reserve Bank's net and exchange control net, which means that instead of us having to use our 1 million or 10 million allowance to send money offshore, we can just buy cryptocurrency and send that offshore as much as you want, right? So if someone, just think about this, like someone has to apply to the Reserve Bank to get access to their 10 million. If you want to take more than that, you have to apply. Now that case just said, if you have 100 million, just buy 100 million worth of Bitcoin and send it over. Don't ask anyone.
But do you then see the opportunity coming down?
So let me explain. So remember now, so people can do that, right? So what will that actually do? That will push up the demand for crypto, because now more people will want to buy on exchanges here. So that should push up the arbitrage percentage. Okay. The reason why you can't use it to arbitrage more than your allowances is because as soon as you buy the Bitcoin here on the exchange, you're already paying the premium. Remember, you're already paying 1.9 million odd for the Bitcoin. So now you buy it for 1.9, you send it over, and then you sell it, and then you buy another one for 1.
So if I understand this correctly, so because crypto is not falling within the definition of capital, okay, in terms of these exchange regulations, a South African individual older than the age of 18 can buy crypto, okay, in excess of 11 million and send that crypto abroad without any SARS approval. Currently, this is what a High Court judgment actually said last, on the 15th of May. That's going to create a massive demand while this window is probably open, okay, until the South African Reserve Bank passes a new regulation or basically amends this, okay, which I think they're going to be looking deeply into changing.
That they've already appealed, eh?
But an appeal doesn't change the judgment. A judgment still stands, okay? So if a judgment has been passed, you can appeal the judgment, but the judgment still stands until it's been successfully appealed. But needless, let's not go into that. My question is, as it currently stands, do you guys anticipate that due to this demand that has just been created, okay, that there's going to be a massive opportunity for guys that wants to engage in crypto arbitrage, because now you're going to buy it in America at a specific price, okay? The price in South Africa is going to be much higher than what it used to be, let's call it 2 weeks ago, as a result of this. Is this what you guys are anticipating, or?
That is, in theory, what will happen if that judgment stands. Yes. Yeah. Companies will start to buy coins, individuals will start to buy more cryptocurrencies and send it offshore. That is actually what that case is about. If you actually read the case,
so
there was a company
that bought it.
A lot of coins in SA sending it out.
Yeah, if I'm not mistaken, it was in excess of 500 million in Bitcoin, and they've transferred it over to the Seychelles. And that actually came under investigation, and this is what led to this entire court case between Standard Bank and the South African Reserve Bank. Okay.
Yes.
Quite interesting. So I think there might be a lot of opportunity, depending on, let's see what the outcome of this is going to be.
We're hoping for it to go up. So, yeah.
If, and this is a question, if that limit falls away, will everybody just do it themselves? And the reason I'm asking that question, let me rather rephrase the question. I think a lot of investors, because they've got each and every person have an 11 million in their personal capacity, if that falls away, why would you need other investors? You can just invest yourself. You can do 100 million, 200 million. Do you hear what I'm saying? What I'm asking?
Yes, but you need to remember that if you can still only send rands of 11 million out, right? And you want to send rands out to buy the coins overseas at the cheaper price because you want to bring it back here and sell it for profit. What you're thinking now is you're going, like in your Coke example, you can't go buy the Coke in Johannesburg for 15 Rand and then take it back to Bloemfontein. You're not going to make the profit, right? So if you're buying the cryptocurrency on exchange here, you're already paying 15 Rand. You're already paying the premium. So then you can send out 100 million, but you can't make the profit anymore because you haven't bought it at the cheaper price.
I get you. You still have to go buy it there.
You have to go buy it there, and to do that, you have to send rands out to buy it in Bloem and bring it back here into Joburg to sell it for profit. So,
got you.
Please help me understand.
Got you.
I struggle to understand the specific concept of buying Bitcoin or any crypto in South Africa and sending it to another country. If I recall your conversation earlier, you said that there's a specific code attached to that coin. And is that a South African code? How do you take a coin and move it from one country to another country in terms of regulation?
Personally, I'm not a Bitcoin expert, but there is no... The Bitcoin lives on the servers everywhere, on nodes. They call them nodes. And it's all across the world. So you can't really say that it is in one country or another. SARS, I think, with some of the regulations that they brought out, they were trying to say that if you send it to a local wallet, that means it stays in South Africa. So if I send it to you, Bernard, or to you, Stefan, then it means I haven't used my allowance. But if I send it to a friend of mine who lives in America or who lives in the UK, then it will use my allowance.
Okay.
So, and they're putting the onus on the exchanges to monitor this.
Okay.
I'm not sure if you also saw there was the travel rule that came into effect, which basically forces the exchanges to make sure who is the sender, the identity of the sender, and who is the receiver, the identity of the receiver, so that they can start tracking these things. Because in theory, where is it? It's
tough to track. We've been talking a lot about SARS. Maybe unpack a little bit the tax implication on this whole investment opportunity. What sort of taxes are we looking at? Capital gains tax? What is the sort of taxes we're looking into?
So the transaction is income in nature because it's a short term. It's a overnight. You are literally purchasing an asset and selling it the next day for profit. It's clear cut income tax. We haven't, no one to date that I know of has been able to wrap it in a nice wrapper to make it CGT or a product, investment product. So the way we operate currently, you need to declare to SARS. We give you a statement at the end of the year. You just say download for the tax period.
Okay, like a normal investment statement.
Like an IT3B.
And companies, can they do Bitcoin arbitrage?
Not at all.
Why not?
Remember earlier I said the exchange control laws currently do not allow companies to send money offshore. They can send money offshore to buy inventory, to buy cokes and import them, but they are not allowed to buy any cryptocurrencies and bring them in.
Okay.
Yeah, which if they were allowed to, the arbitrage wouldn't exist because it would just be traded so flat. The volume would be so large that
If someone wants to start today, what's the three first things they need to do? Call Ben.
Why call Ben and not buy a Forex bot as an example? Because a Forex bots, as I've seen, there's a massive hype all over on social media, not naming any specific people, but if you go on any social media, TikTok, Instagram, YouTube, you look at shorts, there's a lot of hype about Forex bots, okay? Why call and engage with a company like Shiftly and not just buy a Forex bot?
Vander, my opinion is always, if you know how to make a lot of money, why are you making money by charging other people to teach them that? There's the old saying, send me $100 and I'll teach you how to make money on the internet. You just never respond to the guy, and then he learns how to make the money. It's those things. If we're not charging you to tell you about this investment, right? We are doing a service for you. And we're taking a commission for that. So, it's kind of a normal. We're doing this transaction on your behalf and taking a fee. So we're just providing a service. We're not charging you to teach you how to do it. Yeah. But if that answers
my question, yeah. Great answer.
No, definitely. And I think what I like about that answer is you render a service, someone's busy, medical doctor watching this channel, they don't necessarily have the skill, know-how to understand what they're getting themselves into. So rather partner with a professional service provider, get involved as part of an alternative investment, and borrow money. Invest money.
Yes.
But with that said, what is the three first things they need to do?
So firstly, you need to have the money. You need to be able to prove where that money is coming from. Okay? The reason for this is because the money goes overseas, there's a big onus on the bank that's doing the foreign exchange transaction, so converting the rands into dollars, to check where that money is coming from. Okay, so have the money and have the source of where it comes from. Secondly, you need to have your FICA documents, proof of address, ID. Thirdly, you need to be tax compliant. That's it. Yeah, that's it.
No, great. I think it's very insightful. I've learned a lot. I haven't done a lot of research on crypto. I've always heard about a hype. I can definitely see that it might be a potential good alternative investment. For our audience, I think the most important thing is to know that you have to have the money available. Don't go borrow money from a bank. Don't take out a personal loan. Don't max out a credit card to go into this type of situation. I always say that if you engage into an investment, like any alternative investment, you must also be prepared to lose the money to a certain extent. Although it's a safe option. But don't take money and borrow money to invest it in something like this. But I've definitely learned a lot.
I agree. I think it's a prudent option as an alternative option to add to your total portfolio, well balanced. How can I get in touch with you, Ben? Shiftly?
Yes, so email is ben@shiftly.co.za. Otherwise, guys can reach out to you guys. You can send them through to me. Just also on your point, it's quite a low risk investment, right? Remember, the return is actually very low. You're making 1% per transaction, so it's actually a low return, low risk investment. The reason that the returns add up is because you can keep making the investment over time. So I think that's just an important thing for the listeners to remember. Like, you actually making very low return, which is also because it's a low risk investment. It is arbitrage, after all.
Ben, thank you for joining us in the studio. It's been an absolute privilege, something that's been long overdue. I think potentially we can look at doing another episode where we unpack this further. If you are watching this channel and this is the very first time you join us, our goal is to educate, empower, and edify the medical professional, graduate professional, whoever you are watching this channel. We'd love to continue extending, content to you. So hit that subscribe button, hit the like button, share this content with some of your friends and colleagues. And remember, until next time, plan the plan.